Hi, everyone. Welcome to Financial Insights. I'm Linda, your accounting coach. Today, I want to talk about analyzing the balance sheet. A couple weeks ago, I talked about creating a quarterly review for your business. And most businesses, they do that, but however, usually they leave out the balance sheet. I call the balance sheet the stepchild of financial statements. Many times we hear about the profit and loss statement. We hear about, oh, so and so company, increased revenue by this much, their profit was this, but you don't hear too much about the balance sheet. The balance sheet is, I probably think, probably more important than the profit and loss statement. Why? The balance sheet tells you what you own, what you owe, and what you have invested in the company. That's very important because if you want a loan, if you want an investor, and then eventually if you want to retire and sell the company, you need to know those three items: what your company owns, who they owe, and how much you have invested. Well, what's the value of your investment into the business? Very important. So, I want to give you some tips on what items you should review when you're looking at your balance sheet. Number one, look at your balance sheet each month. Very important. Look at it each month. So, number one, look at your cash. Look at your cash balance. You want to make sure that your cash balance doesn't currently say negative. There's nothing odd going on. Look at the general ledger of your cash balance. You want to make sure that you're reconciling to your banking system. So make sure you're looking at your cash balance. Make sure you look at identifying if you have enough to cover expenses, payroll, whatever the case may be. But you want to get very comfortable with looking at your cash balance. And it's not only just looking at the balance sheet, but getting that balance in your head will help motivate you to actually generate more revenue. A lot of times we're so much in our business and we're not even making that much money. That's why you need to look at that cash balance and say, "Wow, what am I really doing? Why is it not bringing in, money that actually that can I can pay myself or even pay myself a good salary, so I'm not struggling." So it's more important. It's just not just looking at the balance sheet. It helps you strategize. Number two, look at your accounts receivable. If you have accounts receivable, you're invoicing clients and they're paying, net 30 days, 15 days, whatever the case may be, make sure that balance is current. So making sure that you're following up with clients, making sure there's no like negative numbers, things like that. So I've seen individuals, they're submitting a balance sheet with negative balance to a bank. Your accounts receivable should never have a negative balance. Next, looking at your fixed assets. Many small businesses are not recording their fixed assets when they're first starting off. So you want to make sure you're recording your fixed assets. What do I mean by that? That means if you have purchased a building, furniture, equipment, inventory, you need to record fixed assets. If you have any questions about, okay, what is a fixed asset, contact a bookkeeper, an accountant, or like myself, so we can help you record that on your book. Because once again, that is an asset. That's a good thing. That's a good thing you want to show on your balance sheet. Next, you want to go into accounts payable. Look at your accounts payable. The accounts payable, once again, represents the amount of money that you owe someone else. You want to make sure that's current. And when I mean by current, there's no old things that you have paid, but it's still showing up on your balance sheet. You want to make sure that number's not negative. So I've seen that a lot too, just with the accounts receivable. Something has went on in the accounting system and the account balance is now showing negative. So you want to make sure that accounts balance represents actual bills that you do owe. Next, you want to look at loans. You want to make sure your loans show the current balance. Your loans are up to date. So if you're looking at your balance sheet and looking at your statement, if your statement says 500 and your balance sheet says 2000, then there's a disconnect. Once again, this is where you get an accounting professional like myself to help you figure out what's going on and get that recorded correctly. And just like with accounts payable, that should not be a negative number. It should actually match your loan statement. Lastly, many organizations, and particularly small businesses, our solo entrepreneurs, they do not look at the specific account. It is the owner's withdrawal. You want to be careful with this account. Many entrepreneurs take money out of their business for personal reasons and they record it in owner's withdrawal. If you take money out for personal reasons, that is taxable. You want to be careful with that. You want to make sure, basically, pay yourself, pay a salary so you can cover your personal expenses. That owner's withdrawal, you do not want that balance to get very high, because if it's very high, it shows a lender that you are not managing your business. It actually is a red flag for many of them, because they'll start asking you questions. Why is your owner's withdrawal so high? Are you paying yourself? And then if you say yes, okay, that's a red flag, because that means you're not managing your money correctly. And then that means you're not paying taxes. So if you wanted to lend someone money, would you lend yourself money? So be careful with that owner's withdrawal. So remember, the balance sheet is just as important as the profit and loss statement. Review it each month. So I challenge you, get a notebook, write down your cash balance for the last 3 months. Go look in your accounting software, see what's going on, see the largest expense, see what's been the largest deposit. Then ask yourself, how can I increase that cash balance? And then take one step this month to start working on increasing that cash balance. Remember, the purpose of business is to make money. To make money, you need to increase your assets. In order to increase assets, you need cash. So you need to increase your cash. So like I said in the previous video, accounting can seem overwhelming. It can seem like you're spinning your wheels. This specific topic is where someone like myself can help you. So contact me, email me, set up an appointment so we can discuss how to get you on track, how to analyze your balance sheet, and even also analyze your profit and loss statement. I promise you, it's not that difficult. The more you do it, the more comfortable you'll get, the more confident you'll be. Until next time, take care.